So you're probably wondering how to get financing for your business right now. According to the 2019 Small Business Credit Survey report by the federal banks, over a third of new businesses were growing last year. And the report shows us a little bit of insight into how those companies found their money. A lot of companies turn to friends and family and credit cards to start their business or grow their business. Right now, things obviously are a little bit different in 2020, and that may not be the most reliable way to access capital to help you grow. Friends and family may be having difficulties of their own due to unemployment or other stresses, and you really should look for alternative ways to find a reliable source of capital. The survey also showed us that only 49% of businesses had their funding needs met last year. So a lot of companies didn't even bother to apply for bank financing. And those that did, maybe they ran out of money. There wasn't enough in that loan that they took to help them meet their needs. And in 2020, bank lending criteria are obviously different. It's a lot harder this year to qualify for a loan. So many companies are turning to invoice financing or factoring as a great solution for financing their business this year. First of all, we don't look at your personal credit. If you're having challenges there, don't be put off to apply for factoring. It really doesn't matter to us. We look at who your customers are and what your invoices are for. What's your product? What's your service? That's going to be our collateral and what we use to advance you funds. It is debt-free. It's not like a loan where you have to make repayments. We take your invoices, we provide an advance on those invoices, we get repaid by your customer. So you're leveraging an asset, which is your receivables, and obtaining cash upfront instead of waiting for your customers to pay you. You can also use factoring as a bridge to more traditional financing down the road. Many companies who are growing very fast will come to us, and it enables them to build their balance sheet. They've got the cash flow tool that they need to grow and increase their profitability. And at the point they reach the size that a bank will then approve them, we let them go. At the end of the day, it's helped them to get from point A, where they needed financing, to point B, where they qualified for traditional financing. It's a great success story. So look at invoice factoring as an alternate to your funding needs.